Hi everyone, my name is Madison Culpepper and I'm a second year Master's of Occupational Therapy student at the University of Tennessee Health Science Center. For my in-service presentation, I chose the personal financial tips for a new grad OT practitioner. In my opinion, this topic is relevant to all of us because soon enough, we will all be out in the field actually getting paid for the work and services that we provide, and we need to know how to manage our money. During this presentation, I will share a few facts and figures with you about student debt, as well as inform you of ways you can set yourself up for the future once you graduate. So let's get started. So first and foremost, I want to start by highlighting the learning objectives for this presentation. There are two learning objectives. One, following this in-service, learners will identify 2 or more ways to decrease their student debt. And second, following this in-service, learners will list ways to manage their first paycheck. So I understand that not everyone will graduate with student debt, and some might graduate with accumulated debt from both their undergraduate and graduate degrees. But regardless of your debt status, here are some facts you might not know about student debt. According to Pew Research Center, approximately 34% of adults ages 18 to 29 report having outstanding student debt. So this number excludes all other forms of debt like credit card, mortgage, etc. And so this also includes people whose loans may be in deferment or they may not be paying on them. But regardless, they have the debt on their record. And among adults aged 30 to 44, only 22% report having outstanding student debt. So we see a decrease in the percentage of this older age range. This is due to several factors, such as the fact that they have accumulated less debt because fewer of them took out loans to attend college or didn't attend it at all. And we also can't ignore the fact that with this age group, they've had longer to pay on their student debt as well, decreasing the amount of people who might still have debt that they are paying on. The figure in the green is a graph that visually illustrates the median amount of student debt accumulated based on the degree they earned. Though this graph is from 2016, we know that the numbers in each of these categories has only increased since then. So for people who borrowed money to earn less than a bachelor's degree, which would be an associate's degree, the median amount of student debt that they graduated with was about $10,000. For a bachelor's degree, it was about $25,000, and for a postgraduate degree, it was about $45,000. And that was the median, so the middle number. And the number of debt could be all along the spectrum. That's just the middle amount. And so we see that it only increases since then, considering now is 2019. So as of March 2019, Americans owed an estimated $1.5 trillion in student debt alone. So what now? I just totally bummed you out about your outstanding student debt. So where do we go from here? Well, like I mentioned before, I'm here to tell you guys about ways to decrease your outstanding student debt. So for the ones who were in my community mental health group, you know I'm all about a budget. Budgeting allows you to assess how much you bring in monthly and how much of that money goes where. We will go over more specific budgeting tips in just a few minutes. So first, we want to discuss ways to decrease student debt. Like I said, create a budget. Next, look into jobs that offer loan forgiveness options. Some employers, not all of them, but some, do offer student loan payments as part of your benefits package. Also, working a government job or a job with a 501c3 nonprofit qualifies you for loan forgiveness after and only after you have made minimum payments for 10 consecutive years. So keep in mind that you don't have to stay at the same job for 10 consecutive years, but the new job that you get or transfer to has to qualify under those same guidelines, or you will not be eligible for loan forgiveness, even if you have made 10 consecutive or paid your minimums for 10 consecutive years. Excuse me. Next, we want to research our loans. So look into payment plans and also see if consolidating your loans will be beneficial. You can lump all your loans together and get one minimum payment or interest rate, and it tends to be less than some individual loans. Next, sign up for automatic payments. This will be discussed more during the budgeting portion, but if you know loans will be automatically taken out, this rules out the option for you to wait and pay your loans with only what's left in your account. It also helps you stay on financial track because you know that that amount will be routinely taken out on that specific day every single month, and you learn to budget without it. Avoid taking on more big debt. So when we graduate, we maybe want to get a nice car or buy a house, but experts advise us to hold off making big purchases that will give us large amounts of debt. It would just take away from the money we could be putting toward our student loans to pay them off faster. Other options that I didn't include on the slide are claiming student loan payments on your annual taxes. The government will provide a small refund, but a refund nonetheless, for when you make these payments. Lastly, I don't know if our graduate loans qualify for this, but some lenders offer a 6-month grace period after you graduate before you are expected to start making payments. So during this 6-month grace period, you aren't required to make your minimum payments, and so you need to take advantage of this time. So go ahead and get ahead of the curve. Like I said, they're not requiring a minimum payment, so this is a time to just put what you can afford toward it, just so that you can get a head start if you can financially afford it. So next, we're going to discuss ways to manage your first paycheck. As I mentioned before, assess your monthly income and create a budget. Next, you want to look into opening up a 401k account. I know that we just started working, and how could we possibly be thinking about retiring, but just remember, it is never too early to begin planning and saving for your retirement. Some employers offer a 401k account through them and will offer to match the amount of money you put in it up to a certain amount. So for example, if you contribute 4% of your earnings, they will match it and also put 4% of their own money into your retirement. So that is free money and their own money that they are putting up that you did not have to work for, that goes toward your retirement that you can use later in life. So look into that. Signing up for a 401k account will also take out that amount before it even touches your bank account. So you will be used to budgeting your expenses without it. Also, look into if your health insurance has a health savings account or a flexible spending account. With these accounts, tax-free money is taken out of your paycheck and deposited into one of these accounts that you and your family can use to pay doctor visit copays and prescription costs and other medical expenses also. I've used my mother's flexible spending account to pay all my glasses for what the insurance doesn't cover. Something to remember, though, is that with a flexible spending account, all that money deposited in there during that year will expire at the end of it if it is not used up. So it's kind of a use it or lose it situation. So you definitely want to keep track of that and use what you've put in it, because that is money you have earned. Next, look into setting up a high yield savings account. That way, while you are depositing money into your savings account for emergencies or saving up for a large expense, that money is also collecting interest, which will help you reach your goal even faster. The last tip is to look into having your paycheck direct deposit split between your checking and savings account. You will be used to budgeting based off the amount of money deposited into your checking and won't even miss the money that is being added to your savings account, and it will accumulate over time. Also, you don't even have to think about it. It's automatically done, so you kind of don't even know what you're missing. Lastly, as I previously promised, I'm going to show you guys how to set up a budget. It can be really confusing deciding how much money to allot for each expenditure. So an easy way to budget your paycheck is to use the 50-30-20 rule. So 50% of your paycheck goes towards your needs. What things fall under your needs category is totally up to you and customizable to your wants and needs, or your needs, excuse me. So some things that might go under needs are groceries, utilities, house payment or rent, depending on your living situation, insurance, transportation or gas, childcare, pet care, minimum loan payments, and gym memberships, depending on how important that is, whether it falls under a want or a need. Next, you will put 30% of your monthly paycheck into your wants category. This category includes eating out, travel, trips, entertainment, and those wish list purchases. What I mean by this is things that we want to buy but don't necessarily need. This category can also act as a bit of a cushion for your needs. Say, for example, your utility bill is higher than you allotted, so you can pull the extra you need to pay that utility bill from your wants. Lastly, 20% of your paycheck should be put into your savings. This way, you are consistently adding money to a savings account for emergencies or for additional loan payments. So if you guys would like to create your own budget, I've provided a loose outline of one under the link to my video on Blackboard. I've also attached a YouTube clip that might help you get started designing your own budget. There are also free resources to learn how to budget, such as the Dave Ramsey app, and it's called Every Dollar. Fun fact, Leah told me about that, and that's what I use to keep track of my monthly expenses. So like I said, it's an app, so it's on your phone. It's really convenient to access wherever you are, and it's helpful for you to stay on track with your finances. Okay, and lastly, I want to thank you guys for watching my in-service presentation. I hope you guys learned something, and please fill out the knowledge check listed below the video.